squeeze in one last corporate conversation on trading hour now. TeamLease reported their numbers, Q3 numbers, close to about 2 weeks back. Now, the reason why we're calling the company is that TeamLease saw a pickup in IT hiring, which they bracket under specialized staffing. So on a quarter-on-quarter basis, the IT staffing, the specialized staffing revenue went up by 9% and almost 12% plus on a year-on-year basis. Now, this is in contrast to what Naukri told us yesterday, where that's InfoEdge, where InfoEdge told us that IT hiring revenue has actually fallen by about 8 to 9%. So to talk more about what's happening in the industry, we've got Ramani Dathi, the CFO of the company. Ramani, first talk to us about specialized staffing. This pickup that we've seen, what led to it? Is it sustainable? And what is it that you're seeing on the ground?
Yes. Now, over the last 4-5 quarters, we have been shifting focus to GCCs over from IT service companies, because we have seen IT service companies on a total hiring freeze. And even the numbers have been consistently coming down, especially on contract staffing side. So this shift to GCCs have helped us to maintain this 12% annual growth as well as improvement in our profits year on year. And we believe that this can be sustained with higher focus on GCCs. This growth rate can be sustained into next year as well. Coming back to IT services, we believe another 2 quarters, the kind of sluggishness may continue, and maybe August, September onwards, we can expect some pickup. But again, it's too early to comment on. This is basis our ongoing discussions with our IT service customers. Maybe by Q1, we can give better color on whether there are actual green shoots on IT services side or not.
So in your specialized staffing revenue, is it possible to break up the dependence on GCC, or what was the GCC contribution versus your traditional IT services companies hiring? And then what was the growth rate in these two segments?
Sure. Now, about 5 quarters back, we used to have 60% concentration to Indian IT services and 40% to GCCs. Now the proportion has exactly flipped. So now we have 60% of our revenue coming from GCCs and 40% from IT services. And once the IT pickup happens, we believe, again, we may go back to 50-50. But we continue to maintain more focus to GCC side, given that more and more GCCs are expanding their base in India with more tech hiring.
Okay. And just one more word on this point. What was the GCC hiring in Q3? And was IT hiring declining? Or is there any number to that?
Yeah, in fact, IT hiring is in fact negative. It's about -1% QOQ. So the entire growth that we have seen in Q3 is all coming from GCCs.
Okay. Also then, which leads me to your next question. Now that, general staffing has been fairly stable for you, and now that IT hiring is picking up, not IT hiring, but the specialized staffing led by GCC, what's the outlook on margins? We've seen margin improvement for the company over the last 2 quarters. Do you expect margin improvement to continue? What can Q4 margins look like? And even on FY25, is there any number that you have in mind?
Yeah. No, we have a clear plan on margin expansion and as well as absolute profit expansion. So we called out clearly that there is a control on overall costs and the process optimizations that have been continuing for last few quarters and has been giving us good upside on operating leverage. So that will continue. Now with the pickup on GCC contribution and also apprenticeship business, so back to positive growth, we are expecting that these 2 businesses will also start contributing to our margins. Also Q4, we have the highest contribution coming from our HR services segment, which is mainly from our EdTech business. So that will also help us to further expand margins in Q4. And we believe the QOQ margin expansion can be around 5 to 10 basis points into next year as well.
So Q4 margins should be up 5 to 10 basis points quarter on quarter, led by HR hiring, the EdTech business, right? Okay.
That's right.
Ramani, got it. Thank you very much for joining in and throwing color on what's happening on the IT hiring front. So IT services hiring is still muted. Revenues have declined by 1% on a quarter-on-quarter basis. But the global captive center, GCCs, they're taking over and hiring a lot of engineers. And that's what's driven growth for TeamLease. With that, it's a wrap then.
It is a wrap, and we haven't had much time to check markets in the show today, but markets are doing fine. Range bound with a positive bias, with mid-caps outperforming by a wide margin. The mid-cap index is up nearly 1%. So it's a wrap on this edition of Trading Hour. Thank you so much for watching. Halftime report coming up next.